Why don't RBI print a lot of money and solve poverty and also make us all rich?
It is one of the very common question or very basic question that people used to have. Even me at my school days, I did have this doubt. See, to solve the poverty, it was easy for government, right? They can just print a lot of money and distribute it to people, and obviously people will become rich, and it is a win-win condition. So why don't people do this or government do this? I could explain this whole concept in this session by four parts. The first thing you have to understand is what actually money is. Only then you'll understand the other things, right? And number two, we have to understand on what basis India has been printing money, right? And number three, we'll be talking about why then India is not printing enough of money or too much money to make people rich. And the fourth and the last part, we'll talk about how actually India has been and what are the conditions for India or a government to print amount of money in excess. So with these four conditions and with this four concept in this whole session, you'll understand why government is not printing too much of money to save you from poverty. Okay.
Then, what is money? How is it evolved?
See, money is just a medium for exchange of value. We all know, right? And money has been existing in this world probably 5,000 years back. See, there is, when you look at the evolution of money, when you look in detail, there is a lot of different phases for money, and we'll talk about it. The first one was obviously the barter system. You might have heard about it, trading off objects for another objects. That is, I'm trading off this cup for probably something else. And I'll give you the example. At earlier stages, let us say a farmer with a bunch of wheat. He'll be trading off this bunch of wheat probably for an animal skin for him to wear at night, and probably he'll trading off this animal skin to get an axe to cut his trees probably. And this sort of exchange from like between these objects has been known as barter system. See, barter system was the early stages of money, but there's a lot of problems in barter system. Obviously you might be thinking about it easily, you would be understanding. See, it took a lot of time for people to have a very basic transaction itself, because it is very hard for you to get what you need. For example, let us say I need wheat, but probably at this point of time everybody around me is having weapons, stones, probably skin and all of that, but I'm not getting the food that I need. Let us say I have this cup to trade off, but nobody is willing to do it. So I'll have to find a person with food or wheat in order to get that food or in order to get what I need. So for a very basic transaction itself, it was taking a lot of time, which was not acceptable for these things, right? Because you won't get things in urgency. But later on you understand, there was few things which was selling off very faster. Obviously food items like salt, weapons, animal skin and all of that was very easy going commodity. That is, if you have that, you would probably buy anything. So eventually people started to collect, let us say, salt as a form of currency, because when they give salt to anybody, they would get whatever they need. So eventually this barter system was having a partiality towards the salt, weapons and all of that, that is easygoing commodities, and thus the barter system eventually started to change. Later on from this point, it has moved to a system where precious metals or coins has been considered as currency. The reason why precious metals has been considered as currency is because they itself has an intrinsic material value. So people started to collect gold coins, silver coins, and etc. as form of currencies, and they used this gold coin to buy anything. You give a bunch of gold coin to some shopkeeper or something, you get lot of rice or other food edible things, or maybe your dress, your whatsoever it is, weapons or whatsoever it is. So this metals started to become the coins or the form of money, but it also had a lot of problems. The biggest thing is it was very hard to transact from one point to another. You think about a group of traders who want to move from one place to another. You think about them sacking up all the coins in a big sack, and they'll have to transport it. It's very hard for them. So it is also easy to get robbed as well. You might understand, right? We might have heard about a lot of stories, the burglars and everybody has been robbed a lot of gold coins and etc. So whatsoever it is. So it was pretty hard for them to transact. It was very difficult for them to have that transaction. But the thing is, Since this material had intrinsic value, there has been a lot of evil activities, or maybe the thieves behind this has been happening. See, tell you about this. There was a lot of people who was smuggling these coins, or they started to clip the edges and reduce the size of coin and transact it for the same value. And the edges that have clipped, they have been turning it into another coins, and they were creating their own money. It was one of the biggest problem. And another biggest problem was that these burglars started to create alloys in this and mix alloys in this coins, and people won't understand easily. Instead of gold coin, they would mix something else as well with the gold, and they could create two coins out of one coin. And all of that started to happen. Since all of that started to happen, the practice of transporting or practice of exchanging metal coins started to reduce slowly, and thus there the currency or the paper currency system started. The most probably, the way that paper currencies has been evolved would be like, you think about a very common village, and village has a very proper authority. So a person, let us say I have a sack of gold coin, I would give this gold coin to this authority, and this authority would give me a paper writing that, okay, this person Ken is having one sack of gold coin here. So this paper would have the same value of this sack of coin, and they could use this paper in order to transact the value. So whoever coming with this paper would get this sack of coin, and that is how I think probably the currency or the note system would be coming in. But basically, the whole point is, when the currency note system is coming in, it is always backed by gold, silver, or an authority. So basically, because it was backed by metals, and also it was signed by authority, this had a transactional value. That is how the currency note might have come into. And from this thing, because this paper currency was backed by a lot of things, there was gold, there was silver, there was a lot of other things as well. So the transactional value started to differ, and it was pretty hard for them to standardize it. Thus came the gold backed currency. A lot of places quickly adopted this gold backed currency. The whole point was, the whole currency system came into gold, and you put up this gold reserve to the authority, you get a paper, and this paper can be used for transactional values and gold based currency. And at 1931, gold backed currency was stopped. And especially when you look into Indian space, from 1931 the gold backed currency was stopped, and silver backed currency started out, basically called sterling backed currency started off at 1931, and still it lasted somewhere around 1956. That was the golden gold backed currency season. And then came in the fiat currency. So what was the fiat currency? And one important thing here is that probably a lot of people think that our rupees even now are backed by gold. Obviously, no, because from 1956, all the gold and metal backed currency has been stopped, and from 1956, we started to have the fiat currency. So, what is this fiat currency? Basically, a currency in which it is backed by the authority of government, not by any metals. Basically, you have the sign of a governor or whoever it is, RBI governor on the note, right? So that is the authority, that is the transactional value. So basically, the government is the transactional value of fiat currency. It is not backed by gold or anything else. And obviously, why this gold backed currency has been removed is because because some countries was easily able to produce the gold, and so they were easily to bring in a lot of money, and they could do the global trade. So they had an advantage. That was one of a big reason. And another reason it was because it was pretty hard for the countries to have that currency in circulation, and also the exchange rates was very different from countries to country, so it also created chaos. So that is why countries adopted the fiat currency method. And for a sake, we have to understand that right now we have the fiat currency method, where the paper that we find value as money is just backed by government or an authority, not by any metals or something. So this is the whole journey of money, right from barter system to the precious metals, and to the currency notes, and to the gold backed currency notes, and then to the fiat currency, which is the current system we have. And probably fast forward, we might have something like web3 currencies like bitcoins, etc. So let's see to that, right?
Then, on what basis India print money?
See, as I've told you, from 1956, government has started to use the fiat currency. That is the currency which is no longer backed by gold or silver by the authority of government. That is, if you have a 100 rupee note, it is basically the government has signed on it saying that, I promise to pay the bearer the sum of X amount of rupees, right? And it is written that guaranteed by central government or whatsoever it is. So basically, we have the fiat currencies which is being backed by government and no longer the gold or silver whatsoever it is. So from 1956, India has moved from that, and India has been printing money on the basis of the minimum reserve system. So minimum reserve system is a very basic system that a country can adopt in order to print money, that they require a reserve of 200 crore worth resources. Okay, so that if a country has 200 crore worth resources, he can print unlimited amount of money. I'm talking about a government. So a 200 crore of reserve, out of which 115 crore should be worth of gold, and others can be bullions and foreign currencies. So if you have a resource of this 200 crore, you can print unlimited amount of money.
If that is the case, why don't we print a lot of money?
See, printing a lot of money would not be the solution for you to, from poverty, because it would end up in disaster. See, I'll tell you about the theory of printing money and inflation, etc. And because it is connected with inflation, hyperinflation, and a lot of other things. But I'll give you a very basic story. Let us give you a very, very subtle example for you to understand how the whole economy works. Okay? Let us assume there is a country, and country is having just two people, A and B. Okay, there is only two people in the country, that is A and B, and the only resource that is available in the country is, let us say, 2 kg of rice. Okay, and A is having 10 rupees with him, B is having 10 rupees with him. So the total currency in circulation of this particular country is 20 rupees. Okay, and only resources which is available is the 2 kg of rice. Obviously, what would be the price of the 1 kg of rice? It would be 10 rupees, right? Because 10 rupees and 10 rupees is the only amount of currency. So obviously the only resources can be bought with the only amount of money, because without resources there is no point in having money. You all know. So in a very micro scale I'm talking about. So if there is 2 kg of rice and just 20 rupees in the whole industry, per kg of rice is going to be 10 rupees. Let us say the government of country said that, okay, let them be so prosperous, let us print 80 rupees each, no, 90 rupees each. So this person A is having 100 rupees now because government has printed him 19 rupees extra, and a person B is also having 100 rupees. So the total circulation of money is 200 rupees in the country, and still the resources is just 2 kg of rice. Now tell me, what would be the price of 1 kg of rice here? It would be 100 rupees. That is, from 10 rupees, the price of per kg rice has gone to 100 rupees, because it is always made sure that the currency in circulation is equivalent or almost equal to the total goods, services, resources in the country. Because without goods or resources, there is no point in having money, is a very big fact, right? If the total circulation is 200 rupees, the per kg price is 100 rupees, and this is a very theoretical example. So you might be thinking all of this is a theoretical examples, right? There is no point, or there is no way that it would happen in practical. So you have to just look into the history of Zimbabwe in 2008 2009. What is happening there? It was happening a hyperinflation. So I think it was 7.9 billion percentage of inflation has been happening to Zimbabwe during the period of 2008 2009. The government was completely in trouble. So in order to end the poverty, what the government has done is they have printed a lot of money and distributed it to people. What happened is the high inflation started to be so high. In the previous example, the price of rice went from 10 to 100, right? The same way the price of goods and services in Zimbabwe started to rise like anything. For you to get a packet of milk, it would take billions of Zimbabwe dollars. So you go with a huge sack of money to a shopkeeper, you would get a piece of bread, or you get a piece of your bottle of water, or whatsoever it is. So hyperinflation happened. So this do happens if at all you are not, if the circulation of money is more than the goods and services of a company, like country, the hyperinflation happens. That is why government is not able to print unlimited amount of money. Okay.
Then how RBI is printing fresh notes?
See, I can tell you that. Out of which, there are 4 printing centers in India. One is, from in Madhya Pradesh, other one is in Maharashtra, other one is in Karnataka, and other one is in West Bengal. So it is all owned by Government of India or subsidiaries of Reserve Bank. Okay, it has been mixed. So on what basis do India decide to print in new fresh notes is, they look at a different cases. I'll tell you which are the different cases they are, or which are the different criterias government is looking for in order to print fresh money, and I'll also explain how and what amount of money would be printed every year or every time being when they decide to print. Okay, the first condition they look for is GDP, the GDP projection. What is GDP? Goods and services. So basically, in a geographical border, the total amount of goods and services available for a country is the GDP. Okay, so let us say we are expecting the GDP to increase by certain percentage next year. Government can look to add this amount of money into new circulation because the goods and services is increasing. That is, in the earlier example I gave, instead of just giving the money, if you were adding new resources, like instead of like along with the rice you are adding wheat, some other food materials or something, what happens is the resources increases, so you can put in new money to circulation. The same way, the GDP have a projection of having a higher GDP the next year. So obviously that amount government can look into, to start to print. So it is not how actually government just print it. I'll give you the right way of how government calculate it, but one of the factors that government look at is the GDP, obviously, because when the GDP is increasing, the money in circulation can be increased. And notably, we have to understand that government do put in money to circulation if the GDP increases. That is, if the goods and services of a company is increasing, that much amount of money has been put into circulation among people as well. And inflation would be taken into consideration, and current stock with the institution. That is, there would be a lot of stock money with the banks and institutions, and that stock also would be taken into consideration. And another criteria that is taken into consideration is the soiled note. That is, soiled or marinated note, which is actually cannot be used in the circulation. But what happens is, government take these notes, they'll fire it up, they'll fire it under a strict regulatory, and then they will print the same value of money which is being soiled. Okay, so that is, the soiled note has also been taken into consideration. And one more important factor that government look for to print money is that till 1997 and all, government has been getting money, or like government has been able to print fresh notes in return of bond. I'll tell you how it happens. Basically, government not always earns. That is, the government earn money from taxes and all of that. Sometimes government have to spend more. That is, there would be a deficit fiscal, right? Since there is a deficit and government has targets for that and all of that, but still on a crisis period, let us say on a COVID period, government had to go to people, go to hospitals, prepare infra, and a lot of money was required. But at that point of time, let's say government doesn't have enough money. What would government do? Government will start to lend money. Usually government lend money from people and lend from institutions, from banks, from other countries, etc. But on a crisis period like COVID, nobody else would be willing to lend the money, right? So at that point of time, government knocked the last door, which is of RBI. Government will ask RBI that would you print some, or would you lend me some money? So it is also known as the lender of last resort. So the process of lender of last resort, the government is asking RBI for money basically. But what happens is, it is not like a common asking. The point is, RBI has to print fresh notes to government in order to put into circulation, because government doesn't have enough money. So at that point of time also, government look for printing into fresh money, and it is also known as monetizing of deficit. The major three factors government look into to evaluate how much amount of money has to be printed. The first one is GDP projection. So GDP projection, it is available in the RBI's website, CMI website, and government website. It is available. And also the other factor they look at is the stock of notes in the institutions, and the other factor they look at is the soiled note. So what happens is, the total notes to be printed would be the GDP figure, the GDP projection minus the note under stock plus the soiled note would be the actual amount of currency that has to be printed. And in India, a 5% extra is always printed for security purposes, and it is basically checked from the regional offices of banks and estimate and consolidates and check the DCM central office and RBI Mumbai and all of that. So that is all the technical part of that. So in a long story short, I could say this. there is no use or there is no purpose of printing a lot of amount of money in excess and distributing it to people for them to become rich, because it's a whole of a process, and this process has a lot of the things, because without increasing the goods and services of a company, there is no point in circulating new money. It leads to hyperinflation and it leads to a lot of other things. Probably in Zimbabwe, you might know that they have ditched the Zimbabwe dollars and they have adopted the US dollars for transaction of value. So those things could happen. So hope with this video I think that you have understood why government is not printing unlimited amount of money and giving it to people for helping them from poverty. So if at all you have any doubts or any questions regarding these things, please make sure you comment below. I could give you right answers for that, and see you next video.